This is Dr. Supreet from Department of Commerce, University of Delhi. Today, continuing the series, we will be talking about the first pillar of income tax, that is the income under the head salaries. We will be talking about few basic concepts with respect to the head salaries. Whenever we talk about salaries, there are certain things that are to be kept into mind. The very first thing comes into the picture is that there should be a relationship between the payer and the pay. That means there should be a relationship between an employer and employee. That employer and employee relationship must exist between in order to compute the income under the head salaries. Now the employer, he can be employer in India, he can be an employer in abroad, and similarly the employee who is serving under the employer can be a full-time employee or a part-time employee. Another point that is to be noted with respect to salaries is that an employer can be anyone. It can be a company, it can be a government, it can be a firm, it can be an association of person. Similarly, any individual, that means any employee who receives a salary from one or more than one sources. For example, he is earning the income from more than one sources. So the income from all those respective, you could say, sources will be taxable under the head salaries. For example, there is a change in the employment of a person during a relevant previous year. So in that case, for example, he was already earning the income from the former employer, and then after the change in the employment status, he is now earning the income from some other source. So in that case, during one relevant previous year, the income would be taxable under the head salaries. So salaries from each sources will be taxable, whether received from the formal employer, from the present employer, so it will be taxable. Similarly, when we talk about MPs, because they provide these social services, and therefore all these MPs who are providing these services, all these MLAs who are providing these services, the consideration that is received by them is not salary. Rather, it will be taxable under the head income from other sources. Another point that is to be kept noted is whenever we are including the taxes under our income tax, whenever we are considering them, so the amount of taxes whatever have been deducted by the employer from the employee's salaries, that is also to be considered. That means whenever we are mentioning the salary, we have to take into account the gross salaries. So whenever we talk about salary includes every element, be it your wages, be it your any sort of annuity received by the employee, be it a gratuity, advance salary, areas of the salaries, the fee, the commission, the perquisites, everything will be taxable under the head salaries. Now, when we talk about salaries, there are a number of forms of your salary. The very basic element is your basic salary. That means the very basic component of your salary. No matter what, your basic salary is always taxable. Another component that comes in your salary thing is your dearness allowance. So dearness allowance is basically your महंगाई भत्ता जिसे हम कहते हैं. So that महंगाई भत्ता is also taxable. Similarly, any advance salaries received by the employee, any areas of salaries that have been received by the employee, both of them are taxable in the year of receipt. No matter whether your areas pertain to any previous year. For example, in the previous year 2022-2023, you are receiving a salary which is pertaining to the year 2019-20, then also the salary becomes taxable in the year of receipt. That means the present year, that is your 2022-2023. So that states whether you are receiving an advance salary, whether you are receiving an areas of salary, it becomes taxable in the year of receipt. Similarly, the bonus is also taxable. Bonus is taxable on receipt basis. That means whenever it accrues, it is not taxable at that point of time. whenever it is actually received by the recipient, then only it becomes taxable. Similarly, any sort of fee, any sort of commissions will be taxable in the hand of your employee. Further on, there are different elements of your salary which will be categorizing in the different coming segments. For example, let's say leave encashment, gratuity, pension, remuneration that you receive from any sort of extra duties that you are performing. So that will also be, fully taxable. Similarly, any HRA received by a person will be taxable. Any sort of your gratuity, any sort of your, you could say any other benefit that you are receiving as a component of your salary will be taxable in the hands of your employee. Now, whenever we talk about salaries, there is a basic format of the salaries. We categorize basically it into 4 segments. The number 1 being your basic salary, the number 2 being your allowances, number 3 perquisites, and the number 4th one contribution towards provident fund. And after combining the income from all these 4 respective segments, that is your basic salary, allowances, perquisites, contributions towards PF, we come to this point of your gross total salary. And from this gross total salary, we provide 3 sort of deductions under section 16. One pertains to the standard deduction, then comes your entertainment allowance, then comes your professional taxes which have been paid by the employee. And after providing the deductions under section 16, will come to your final income that will be taxable under the head income from salaries. Now, one by one we will be taking up all these elements, starting from the very one that is your basic salary. As I mentioned initially, basic salary is fully taxable. Now, in case the salary becomes due on the last day of the same month, for example, for the month of you could say April, it becomes due on the last day of the April, which is, let's say, the 30th of April. So in that case, the particular year that will be following up for this thing will be April to March. And in the another case where the salary becomes due in any day of the next month, then in that scenario, the period would be counted as the proper period from March to Feb. For example, your salary of February becomes due in the, let's say, the first week of your March. So in that case, we'll be following this particular period of March to Feb. Second component that is there into your income under the head salaries is your allowances. Allowances are basically, categorized into different segments, and these are paid in cash only, right? There's a difference between allowances and perquisites. Allowances are always paid in cash, whereas your perquisites, they are paid in cash and in kind also. And allowances, they are the basic element or you could say the extra income or a part of your income that have been provided by the government so as to cover your certain expenditures with respect to your employment purposes. So whenever we are talking about employment allowances, we are talking or we are categorizing them into different segments. The very number one being allowances which are exempt to the extent of expenditure incurred. That means these particular set of allowances are specifically given for the employment purposes. So the in these all these segment of, you could say, allowances, whether we talk about tour or traveling allowance, that means that allowance that is given to an employee for a tour purpose, and that tour purpose should be related to your official things. Second is, for example, an employee is being transferred from one place to another place, then also this tour and traveling allowance is given, and it is also known as tour, traveling and transfer allowance. It is given to a person in that particular scenario. So in this particular case of your tour traveling allowance, whatever be the amount of allowance given to the person, and the second component being the amount actually utilized by the person for that specific purpose, right? So out of these two categories, whatever be the lesser amount, that will be taxable in case of that respective employee, right? Next is your conveyance allowance. Conveyance allowance is given for the purpose of, you could say, let's say one is coming to the office, right? So to and fro expenses are being paid off for the same, right? And from the residential place to the place of working, these expenses are being paid. And in case, for example, a person is getting 10,000 rupees for that respective conveyance allowance, and the person actually utilizes, let's say, 8,000 rupees for the purpose. So in this particular scenario, 10,000 or 8,000, whichever being the lesser one, that is in this case is the 8,000. It will be your exempted one, and the remaining 2,000 will be taxable in the hand of the employee. The third allowance is your daily allowance. Now, what is the daily allowance is? For example, right now we mentioned that we do provide, the government do provide the transfer allowances. Now, for example, the person is, on a training program, he is being sent by the institution, and onto that training program, he will be first given the tour and travelling allowances by the government, and then there is a segment of your daily allowances. Daily allowances are the expenditures that has been incurred by the person. For example, he is going on a training program, so whatever the nominal expenditures he is incurring while on being there in a particular place, so all those daily allowances are given to a employee. Now again, for this sort of your allowance, the allowance that has been given or the amount that has been actually utilized for the specific purpose, the lesser one or the least of these two segments will be taken up as the exempted one, and the remaining will be taken up as a taxable one. Similarly, the fourth category being your helper allowance. So helper allowance is a sort of your, you could say, allowances in case of providing an aid to an employee, wherein is the intent is like for a person who is an employee who is engaging a person as an helper for any sort of assistance. So he will be given an helper allowance for the same. And similarly, in this scenario also, the amount that has been given to the person or the amount that he actually utilizes, whatever being the lesser one, will be exempted, and the remaining balance will be taxable. Further, research allowance is also given. The intent of research allowance is to perpetuate or to boost the research skills of an employee. And the further being is for the uniform allowance. Uniform allowance is for the maintenance of the uniform of an employee. And with respect to your all these 6 allowances, there being a basic rule that in respect to all these 6 allowances, the amount of allowances which is given to an employee or the amount that is actually utilized for this specific purpose, whatever being the lesser one, will be exempted in the hands of the employee, and the remaining income will be taxable. Now, for in continuation of the same, let us assume one example wherein we are taking up Mr. Z. He receives 12,000 as conveyance allowance, and let us suppose the actual expenses that have been incurred by Mr. Z are 10,800. So in this case, the least of these two figures will be exempted, which is your rupee 12,000 or 10,800. Now in this scenario, you could see that 10,800 is the set of your lease expenses. So out of your 12,000 that has been received as in conveyance allowance, your 10,800 will be exempted, and the remaining 1,200 will be taxable in the hands of your employee. Now, as I mentioned, we divide the allowances into different categories, right? So the first one is one wherein we do consider the actual expenses incurred by the employee. The second sort of or the second category of your allowances are those which are fully exempted in the hands of the employee. That means all these 4 sorts of your allowances, they are exempted in the hands of your employee. The number one being the government employees. Let's suppose any government employee who is working abroad and he is receiving any sort of allowance, so that sort of allowance will be exempted in his hands. Similarly, any allowances that have been paid to judges of your High Court and Supreme Court, they will also be exempted. Any employees of your UNO and its branches, again the allowances received by them will be exempted. Further on, the notified set of allowances that have been given to both the serving and the retired chairman and members of UPSC will be exempted in the hands of your employee. The third category being the allowances which are fully taxable. That means irrespective of their actual expenditure, these allowances are totally taxable. It is being your dearness allowance, your city compensatory allowances, any sort of your lunch, tiffin allowances by whatever name being called, they will be fully taxable. Similarly, if you get an helper allowance as we mentioned in the previous one, in that case it will be exempted to the extent of expenditures involved. But if it is a servant allowance, in that case it will be totally taxable, irrespective of the fact whatever being the actual expenditures incurred onto the same. Similarly, if you are using in conveyance allowance for the private purposes but not for the purpose of employment, then it will also be fully taxable. The next segment being your entertainment allowances also. Now, entertainment allowances, they are totally, you could say, exempted in the case of your government employees, but in case of your non-government employees, these are fully taxable. Further on, any sort of overtime allowances, any type of your warden allowances, right? Warden allowances are given to a person who is there in an institution, performing the role of as a warden, and then he'll be getting those warden allowances by the institution. In that case, those warden allowances or any other sort of your special allowances being given to the employee, that will be fully taxable. Further on, the next category being the allowances which are exempt to the extent of limits that have been specified in section 2BB. Now, what are those allowances? The number one being your children education allowance. So, this is the allowance which is given in order to, you could say, help you out with respect to the expenditures related to your children's education. Now, as per the income tax rules, the allowance is exempted for 100 rupee per child to the maximum of 2 children. For example, let's say Mr. X is there and he receives 1200 per month for 3 children for the education. In that case, what is the amount of, you could say, allowance that he is receiving? He is receiving 1200 for, let's say, 3 children and for, let's say, 12 months. So, the total comes out to be 43,200. Now, out of this 1200 that he is receiving for 3 children for 12 months, what will be the exempted amount of allowances? It will be only 100 and 100 per child to the max of 2 children. That means he will be given an exemption of 100 rupees per child for 2 children maximum. So, now in this case Mr. X is having 3 children, but he will be given an exemption for 2 children and that too to an upper capping of your rupee 100 per month. So, in this case your 2400 rupees becomes exempted and the remaining amount will be your taxable income, that is your 40,800. Now, take another example. For example, let's say Mr. X, he receives 1200 per month for one child for the education thing. Now, he is receiving 1200 per month, that means for the 12-month period and for the one child. So, he is receiving 14,400 as your children education allowance. Now, what will be the amount of your exemption in this particular case? It will be 100 rupee for one children now, because the upper capping being is there for the 2 children. So, now in this case your 100 rupee will be exempted for 12 months, right, and that too for the one child. So, in this case 1200 will be exempted and the remaining amount, that is the 13,200, will be the taxable amount. The next one being your hostel expenditure allowances. Now, these are the expenditures which are given in order to meet the expenses with respect to your hostel expenses. Now, they are again being given to an upper limit of your 300 per child, right, and that too for a maximum of your 2 children. So, in case you are receiving anything more than this particular limit, that remaining amount after giving an exemption for this particular limit will be taxable. Similarly, the allowances which are being given to the transport employees, in those scenarios, the 70% of such allowances or rupee, let's say 10,000 per month. Now this 10,000 per month is given under the income tax rules. So the lower of these two amounts will be exempted. Whatever amount that you will be receiving as your allowance for the transport employees, for that thing, the least of these two rules, which is your 70% of the allowance or 10,000 per month. So the least will be exempted in that particular case. Now the next being the transport allowance, which is given for the commutation thing, that benefits, that is with respect to your from place of residence to a workplace. Now this allowance is only available to the specially abled person, and that too with the upper ceiling of your rupee 3,200 per month. Now any specially abled person will be able to get an exemption up to rupees your 3,200 per month, and any amount exceeding the same will be taxable in the hand of that respective employee. Now next sort of your allowance is your tribal area allowance, which is there available in case of your states as your Madhya Pradesh, Tamil Nadu, Assam, UP, Karnataka, Tripura, West Bengal, Bihar and Odisha. And the amount of exemption is rupee your 200 per month. Similarly, in certain scenarios, the employees also receive a border area allowance. Now the border area allowance, it varies from 200 per month to 1,300 per month, depending on to the area, depending on to the region. So if that particular allowance that have been received by an employee, if it falls into this particular limits with respect to different states, different regions, then to the extent of that particular limit that have been specified under the rules, it will be exempted, and the rest of the amount will become taxable in the hands of your employee. Now another very crucial allowance being is your house rent allowance. Now this house rent allowances are being paid by the government in order to meet the rental expenses with respect to a house or a home. Now in this case, there are three criterions that have to be considered. So in this case, whatever be the actual amount that you receive as an HRA, the least of these 3 points will be considered as being exempted. Now what are these 3 points is? Number one is whatever being the actual amount that you receive for this HRA. Let us suppose if you receive 12,000 rupees, so that will be your actual amount received. Second point is rent paid over 10% of salary. Now when we say HRA, here the connotation salary means your basic salary plus your dearness allowance, and that too that dearness allowance which is forming a part of your salary. So it will be given to you whether your DA is forming a part of your salary or not forming a part of your salary. So only that component which is forming a part of your salary will be taken up for this connotation, plus the commission that you receive on percentage basis. So the aggregation of the same will be considered as your salary. So in this second number point, you will be taking up the rent paid minus the 10% of this salary. So the salary will be computed taking up the summation of 3 segments, that is your basic salary, your DA that is forming part, plus the commission on percentage basis. The third component being is your 50% of salary. So in case you are staying up in a metropolitan city like Delhi, Mumbai, Kolkata, Chennai, in those scenarios, you will be taking up the third limit as your 50% of your salary. And in case you are residing in any other state, then you will be taking up it as 40% of the salary. Now, given these 3 points, whatever being the least one will be exempted, right? For example, let's say any person, any employee, Mr. Z, he receives an actual amount of your HRA as 72,000 rupee, and let us suppose he is having a salary of your 9 lakh rupees. Now here, as I mentioned, this 9 lakh rupees is an aggregation of your basic salary plus the DA that is forming part of the same, plus the commission on the percentage basis. Now you have been given that you are having a salary of 9 lakh rupees and plus on to you are receiving an HRA of 72,000 rupees. So the first limit being is your 72,000 rupees. The second limit will be taken up in this case as your rent paid minus the 10% of your salary. Now let us suppose in this case the person is paying 8500 rupees per month as the rent. So we will be multiplying or take up the case for the entire year and would subtract the 10% of your salary, which is your 10% of your 9 lakh rupees. So that is how we come to your point number 2. And in the third scenario, we will be directly taking up the 50% of your salary. Now let us assume the person stays up in Delhi only. So in this particular scenario, the 9 lakh rupees, the 50% of this 9 lakh rupees will be taken up as the person is residing in Delhi. So the limit comes out to be 4,50,000. So in this case, the exempted HRA is the least of these 3 points, which is as per point number 2, which is your amount 12,000 rupee. So out of that 72,000 rupees that you have received as an HRA, your 12,000 rupee will be exempted and remaining 60,000 will be taxable. Now moving on to the next allowance is your entertainment allowance. This entertainment allowance is actually given with respect to, you could say, the hospitality expenses, right? So there are certain limits in this case when we are talking about entertainment allowances. First thing is that this deduction for entertainment allowance is only available in case of those government employees which are working with the central and the state government. Now in this scenario, what is the amount of your entertainment allowance that will be exempted will be, let us suppose whatever being the actual amount that you receive. So there are three limits again, and the least of these 3 limits will be taken up as an exempted one. So let us take the number 1, actual amount received. Whatever being the actual amount that you receive as entertainment allowance, that will be your point number 1. Point number 2 will be your 20% of salary, and in this case the salary connotation is defined by only your term basic salary. It does not include the DA, it does not include the commission also, right? It only includes your basic salary. So your 20% of salary will be taken up as the point number 2, and the point number 3 is the limit that has been defined under the act, that is your 5,000 rupees. So in this scenario, the least of these 3 limits will be taken up as an exempted one, and the remaining amount will be taxable. And as I mentioned earlier also, the non-government employees are not eligible to claim the deduction which is available under section 16 subsection 2 with respect to your entertainment allowance. It is not available in case of your non-government employees. So that's it for your allowances. Thank you for the day.